Welcome, everyone, to the first ever Long Reads Live. This is an experiment. So those of you who don't know me, I'm Nathaniel, probably better known as @NLW on Twitter. Oh, and I have, oh shit, I have it up because I was already bopped it. All right, anyways, I'm glad there's only 2 of you watching at most. Anyways, this is the first Long Reads Live. And the idea is that, so I do this thing every Sunday called Long Read Sunday, where I go through all week and I spend a ton of time looking at what's the most interesting thing that people are writing. And what this came out of was seeing that something like 80 or 90%, at least it felt like to me, of the really interesting insight in the crypto and Bitcoin space was coming from Twitter and Twitter threads, and it was getting lost forever. And so I wanted to start experimenting with a way to capture that, put it together, give people a chance to dive in a different way. As I've been doing that over the last 14 weeks, another thing has happened, which is that a ton of new content producers, a ton of new curators have come onto the scene. The podcast space has never been better. There's just more happening. And the interesting thing is that I felt like with all of these podcasts, there wasn't necessarily a lot of people talking about what's happening right now and getting that sort of not interview, but conversation. And so the attempt of Long Reads Live, and we'll see if we even do it again, is to have an actual conversation. So each week I'm going to have a different guest host who's going to come riff about what they're thinking about, and then we're going to bring on guests to talk about whatever's happening that week. And so my first guest co-host, which I'm so excited for, is Mr. Travis Kling. Travis, people have been hearing about you a lot recently. I won't do your full bio just because that's at the beginning of every podcast you've done. But you are a hedge fund guy turned different type of hedge fund guy, thinking big about this space. And so I guess give me the 2 seconds on your fund, and maybe we can start with this podcast you did with Pomp about a week and a half ago. It came out, I guess, and it's really captured a lot of people's attention. I'm interested to see what the response has been.
Yeah, no, appreciate it. Thanks for having me. Glad to be here. I'm the founder and chief investment officer of Ikigai Asset Management. It's a crypto asset investment firm. We do venture stage stuff. We do liquid investing as well too, in sort of a multi-strategy format. And yeah, fell down this rabbit hole last summer and was previously a portfolio manager at Point72, left in December to pursue crypto investing full time, and moved out to Los Angeles from New York in the first week of March, and been blowing and going on building Ikigai since then. You know, I think from the get-go, you know, one of the fundamental differences between investing in this asset class and more traditional asset classes is how much conversation is happening out in the open and in public spheres, and how much that conversation can sort of drive actual price action. And that's really cool. And it's sort of the Wikipedia approach versus the Encyclopedia Britannica approach of we're trying to kind of crowdsource the truth in helping to understand what exactly is this magic internet money, why is it valuable, and what are the next years to decades going to look like as we continue through time. So that makes Twitter matter, that makes Medium matter, that makes podcasts matter. I think a little bit like I think we're all sort of shepherds of this technology. It's you got to remind yourself that it's an incredibly small amount of people that are actually dialed into this. It's easy to lose sight of that when you're down the rabbit hole all day, every day. But it is our obligation to help the rest of the world just understand how to think about some of these things, and that happens in public forums. And so we've done a few podcasts. It's all been super well received. Pomp's podcast that was released, I think not quite 2 weeks ago now, struck a chord to another another level than I think prior stuff that I had done. I think it was some combination of sort of my just openness and willingness to call it like I see it, which I think is just fundamental to me as a person. I'm just going to call it like I see it every time. And that coupled with, pretty significant traditional hedge fund investing experience that gives me a frame of reference that that may be just a little bit more informed about certain types of market action than a number of other market participants. And so like the feedback on this thing has been overwhelmingly positive. They've had like north of 10,000 streams the first week it came out, and people have been reaching out on every sort of medium just to tell me they appreciated it, and thought that there was a lot of truth in there. And so that's all felt good. And I think I'm just, as I continue to go forward, I'm going to continue to try and just call things like I see it.
Well, so this is the interesting thing, right? So I've known you for a while, and I think even in our first conversations, what I loved about you was that for sure. But it's not just you're calling like you see it. You're also seeing a lot, right? And you're able to synthesize it and make it into patterns. And I think that one of the real challenges for this is like, so many people, and me included, are excited about this space because it feels like this mass democratization of entrepreneurship, this democratization of who has the controls to make money. It feels like a democratization away from traditional ways that you organize network, which are centralized business models, to different ways to organize incentives, yada, yada, yada. But there's this sort of undercurrent as well of like, the big boys know how to use the tools of the trade a lot better than a lot of the new entrants into the market. And to some extent, like if we aren't aware of that, we're chum, right? Like, and I think that that's part of what you can articulate, not even in a judgy way, right? Like it's just in a understanding what you're up against as sort of trying to be a professional in the space, right?
Yeah. The other thing that's just like a funny side note, I had probably a dozen people specifically mentioned that my really hoarse voice seemed to add to my like the genuine nature of the comments, which is like just hilarious. That like if 12 people tell you that, then apparently that's like something close to like a consensus view. They're like, if you have a hoarse voice, then like you must be speaking the truth or something like that.
That's good to know. That's some serious optics right there. So specifically, there are a couple of things that you talked about. One is you actually went deep on like what are these sort of mechanisms that are going on BitMEX constantly that people are using to stay engaged, right? And I think one of the things that's interesting about like the difference between last year and this year is if you look at the story of crypto markets in terms of which exchanges matter, like you could make an argument that 2017 was the year of on-ramping through Coinbase and getting into altcoins through Binance or whatever, right? Whereas this year, in sort of a stagnant, sideways, down, whatever you want to call it type of market, it's been the year of BitMEX, right? And trading and real traders go both ways, as Arthur Hayes' top of his Twitter says, right? So that was part of it. But then the other part was actually digging into wash trading, right? And just sort of like the general, what you call, I think, market manipulation, or at least volume optics, let's call it, if we don't want to go so far as to call it market manipulation. This seems to be something that's like you think about a lot. And I imagine this comes from your perspective too, as like a steward of other people's money, is what are the actual things happening behind the numbers that I'm seeing, right?
Yeah. Did you listen to CZ on Shin?
I did, yeah.
Did you notice that he I don't know if she asked that. I don't know when they recorded that. I don't know if she asked that after hearing my podcast or whether that was, up for discussion regardless. But his answer was like really interesting in the fact that like he didn't deny it. Like he kind of tried to skirt around it, but basically settled on the stance of I can't do anything about it, which is like it's not really an acceptable answer, I think. And I will also tell you on the liquidity modeling side and stop hunting on BitMEX, I can also tell you that those market participants have not denied that as well either after the fact. So
this is kind of in the category of what I would call, it's like, as we're thinking about, I don't know, as I was thinking about what I want to bring onto this kind of conversation, it's like what parts we're just going over the events versus we're looking at the narratives. And so narratives are something I write about a lot and I think about a lot, because especially in this type of market, the stories that we're telling about what's happening out there, obviously they drive behavior, and narratives actually become a tool for different people to shape the market the way that's going to be beneficial to them. And so I feel like this narrative has been one that's on the rise and is getting more light on it, and you're seeing more. I guess what else are you seeing right now in the markets that are kind of like emerging narratives, things that have been murky that are starting to get clear, or just things that are your kind of your spidey senses tingling about?
Yeah, I think in the last couple of weeks, I thought it was interesting that the market's ability to shrug off the Bitcoin CVE vulnerability. Like, you asked me a few months ago, like, or you lay out the scenario, like that sort of announcement happens, what's the price response? Like, I would call a market crash on that one. And the market was kind of able to shrug that off. The market was able to shrug off the New York Attorney General's, what was it, virtual?
There's like a 4-word thing, right?
Yeah.
The exchange targeted document.
Yeah, yeah. And the market seemed to be okay with that. And then there's been some positive news events as well too. Fidelity making a sort of formal announcement into the space that they're going to be providing some products soon. I think people close to this space knew that already because they've been around it for a long time. But just seeing that more structured in an external facing kind of capacity, I think it was important to see. And the Coinbase Index Fund, I think, is like important to see. So I think you've got like these pushes and these pulls for market price right now. I think recently you're starting to see, this is just over the last couple of days, some things starting to come out about Noble Bank and Tether. And the Tether FUD is like, never ending. But I think it appears to be rearing its head in a new form now with questions around Noble Bank's, I guess, at the operating level, a potential for a liquidity crunch, or just like that the company itself is running out of money. I don't know if that's true or not. If it is true, it could certainly be an issue, because even if they had dollar for dollar backed for Tether, which I believe is the case currently, if the bank itself is running out of money, then like that could certainly cause a hiccup in the marketplace. And the kind of scary dynamic around that is that you have a lot of crypto funds that have made significant investments into stable coins that are competitor products to Tether. And so now you have the potential for funds to start using this like Noble Bank narrative as a weapon to get market cap out of Tether and into the stable coins that they back so they can make money. And that's just like, you just don't like, I don't know, you don't love seeing that, right? Because then you have to parse through, instead of people just wanting to try and find the truth, then the truth starts getting distorted for sort of other purposes, for profit generative purposes. And like, you don't like seeing that. So I guess TBD on how that one's going to develop, but it's something that we're paying attention to.
Yeah, no, I think it is interesting, right? So this is I've written about this concept as like market narratives or marketing, but I think that what you're pointing out is that it's even more than that. It's like you can actually weaponize these narratives in a meaningful way when you're dealing with big stakes. And I think that so one of the things that a lot of people I think have wondered over the last, call it 3, 4, 5, 6 months, is whether stable coins this year were going to be like the ICOs of last year, right? Because there's, this last week there was another one or two more, right, launched, and it's such an important part of the infrastructure. I think that's the thing that makes it different and kind of raises the stakes. Is I think I was reading today something like it's just a huge amount of the actual transaction volume of paired transactions comes from stablecoins with major assets like Bitcoin. So when you're dealing with the potential for people to wreak havoc using FUD in a very sort of weaponized way, I think is real and interesting.
Yeah, I mean, in terms of weaponizing that, I mean, I think you totally saw that with Ethereum price action and the sort of like ICO death spiral, prisoner's dilemma type of situation that happened to coincide with Ethereum being the Ethereum perpetual swap being listed on Bitmain, where you can go get PX leverage. on the short side with good liquidity. And, you know, after the fact, we've seen, you know, from a numbers perspective, because you can track the wallets, that really only, you know, I think it's different numbers vary, but it looks to be, it's less than half of ETH raised by ICOs actually ended up being sold. And so, you know, that's a narrative that was like kind of, you know, maybe like half true or like pseudo true, but it's just, it's going to have a tendency to grab onto these things and then just run with it and basically be like, okay, this market's not going to have to show me that this thing is not true. And I think that there's a potential for this Noble situation to get like that. I think if we, you know, everybody's watching, there's a massive descending triangle that's been formed since March, basically, for BTC, where you've got, you know, 5850 that's held like this, and you've got this descending triangle that's coming down like this. It's been tested and held as resistance 3 different times, and you're coming to you know, the angle of that triangle. And so like something from a TA perspective is going to break out here pretty soon. And if we break down from here, the market narrative of crypto fund redemptions, I think is going to start getting traction here pretty soon as well too, where like you had a meaningful amount of capital raised in crypto funds in Q4 17 and Q1 18 of this year. You know, some portion of that, or maybe a lot of it, is going to have 1-year lockups on it. So there's a potential for those funds to become unlocked, and if they start seeing redemptions, and again, it's like it's you're not really going to be able to prove it one way or the other. But if it just gets a little bit of traction like that, this market has a tendency to just go, okay, now prove to me that that's not the case, and you can literally like perpetuate a narrative into existence, like right.
It's a little bit guilty until proven innocent. I think it's interesting too. Like one of the things that I guess I'm hopeful for is that, you know, I think that sort of pattern is okay if and only if there's also a countervailing force of people who are going to hunt down the numbers to see how it actually shakes out, right? So I think it was interesting, you know, BitMEX was kind of charged and indicted by the Ethereum community as being one of the offenders for both the actual mechanism by which it was, you know, having negative price action, but also pushing it. But it was actually BitMEX's report, which just came out today, that was the first thing to really say this whole death spiral narrative is kind of overblown. Not because there isn't some truth to it, but because there's of the total supply, circulating supply of Ether, probably a lot less of it is contained in the the treasuries of ICOs, you know, that we thought. And it's kind of like it's still a reasonable market signal to look for if they're selling off. But if we know that relative to the overall market price, it's only going to cause so much change, it just kind of buffers the ability for it to move.
Look, like, not disagreeing with you, but you also need to just think about the source. And Arthur Hayes he's not long Bitcoin, he's long vol. He needs price volatility for the casino to go and make money. And you know, the death of Ethereum is not in his best interest. His best interest is to get a lot of two-way flow. And you know, I think in the same way that, you know, whatever, a candy bar company is going to do some research and decide that sugar's not that bad for you. Like, hey, you know, here comes Arthur Hayes, like letting people know that, oh, it's like Ethereum's going to be.
Yeah, it's reasonable. Hello, Katherine.
Hi, guys.
How's it going?
Can we hear me okay? I mean, I have my like fancy microphone right here, so hoping that helps with the quality.
Yeah, you sound good. You sound good from here.
Awesome.
Where are you calling in from? You're not on home territory right now, right?
I actually am. So I'm still in New York City, but tomorrow morning fly out to Palm Springs and then spending the week in San Francisco. So I'm really excited.
So I feel like people mostly know who you are, but so this is Katherine from Messari. Do you want to give just a quick background, and then we'll dive into some of the stuff that we've been seeing the last week?
Yeah, sure. So yeah, for those of you who don't know me, my name is Katherine. I head up business development and community at Messari, which is a New York City-based startup aiming to provide more transparency into the crypto asset place or industry. I can talk more, but I think that's probably enough.
No, well, so speaking of transparency, so part of why I pulled you in, so Travis and I were just talking a lot about how numbers can either reinforce or actually counteract narratives. And I think one of the things that's been interesting over the past couple of weeks has been the narrative and the conversation around Bitmain. Obviously, this is one of the biggest industries, or the biggest companies, certainly from a mind share perspective, if nothing else, in crypto, that has had sort of a lot of history, a lot of baggage, in the space, and has this IPO coming up. And just last week, for the first time, we actually got a chance to see their big sort of filing documents, right?
Yeah. Go on.
No. I was going to just hand it over to you. So basically, you did everyone a solid and read through the whole thing and tried to actually summarize it, which is amazing, because otherwise it was just going to stay as a tab in all of our like browser windows.
Browsers you can never get to.
Yeah, exactly.
Yeah. I mean, I was reading it anyway, and I was jotting down notes. And I'm like, you know what? I might as well make this a tweet storm. And Bitmain's one of those companies where you talk about, there's a lot of intrigue around, but filing a 432 disclosure report is, it's huge. There's just so much information in it, and people have been speculating about the IPO for, months now. And so for them to finally release this, and I think Bitmain is one of those companies that's definitely impressive, but also very controversial. And so I think this was just one of those things that, once they released it, it was really, it was interesting to go through the information that they had in there. And so, for example, we know Bitmain makes a ton of money, but the fact that their revenue is 2.8 billion is just crazy. And that's just not even a whole year, that's just in the 6 months. So, that just is mind-boggling. I remember Ryan and I were actually in Asia in June and July, and we went to the Bitmain office, and they actually own like 2 buildings in Beijing, by the way. And just kind of walking through the office, you see the scale, like you visually see the scale of the company, which is like, over 2,000 employees. And that's just, it's really hard to describe. Like when you just walk into a building, you're like, oh my God, there's like over 2,000 employees in here. That's just mind-boggling. But actually being able to like dig into the data and see it like on paper, I think it just really illustrates the scale of it. So there's been a lot of questions, I think, around the numbers that Bitmain has kind of put into their disclosure docs. So with my summary, what I tried to do was just really stay very balanced, and just kind of took out the parts that were mentioned specifically in the documents. And I want to like just reiterate that these documents do not mean that they're listed yet. So they're really just on step 3 out of step 7. So in order to get listed on the Hong Kong Stock Exchange, you start with, you start preparing, and you start like looking for sponsors and etc. And then you file like an application, which is what we saw. So that's step 3. So once like this is out, which only happened late last week, it still needs to get vetted by the listing department at the stock exchange, and then there's a hearing, and then there's like a whole marketing period, and then you get listed. So for example, like Bitmain's main competitor in China, or even like globally, Canaan Creative, which is I think the 2nd largest mining equipment company, filed its application in May, and we haven't heard anything. So it's been 4 months. So just because they've disclosed this, just because they filed the application does not mean that they're going to get listed. But it is like obviously a major step to getting listed. We just don't know when that is going to be.
I would love to. I should probably do some digging on my like former career path side of things. Like I'd love to talk to like an Asian equity capital markets at like a bulge bracket bank kind of guy. And just like what is the appetite for an IPO like this? Because the way that I think about it is like, the like first risk disclosure on any prospectus like this is, past performance is not indicative of future results or whatever. And I feel like the money that they made in the past, like relative to like expectations for what they're going to do going forward, I think that it's just drastically different. You're seeing like, NVIDIA, right, in their last quarterly conference call, wiped their expectations for profits from mining equipment for the rest of the year. And you're seeing a massive slowdown. And like the industry is, generally speaking, gotten overbuilt. Hash rate has gone up 4x year to date. and you know, what was formerly an incredibly profitable business. Like, I'm just not so sure what the outlook is on that. So I'm curious about what the appetite is.
Yeah, I mean, just going back to traditional markets, if we're really trying to do a throwback, like remember the quarter, so right before Lehman, like the whole thing imploded, they had an earnings call that went super well, you know? So that totally, you know, nothing's like changed, like past performance does not indicate anything. But with Bitmain specifically, I mean, there are a couple things to think about, right? So I think there was a tweet storm by Samson, who's kind of a vocal critic of Bitcoin Cash and Bitmain in particular, which is not super different from like, you know, what I said, except that he pointed out that, okay, in the financial statements, for example, there's no separation of quarter Q1 and Q2 results, right? So you lumped it all together in one. He brought up questions about timing, you know, why are you rushing before Q3 to file? Like, you know, there's a lot of questions around the, you know, the quarter over quarter sort of like comparison there. And also I think it's worthy to point out that like, yes, the revenue numbers and the net profit numbers are the revenue numbers are really impressive, right? But also that the cost of sales in this time period was up to like 64% of revenue. So it takes money to make money, yes, but also, you know, you think about like how much production costs there are. And then I think the other thing is, you know, even within the financial statements, Bitmain actually does lump all of their crypto holdings into just like one line item. So we can't really see that sort of breakdown. And then I think another thing that was interesting was the way they accounted for their crypto holdings. So they accounted it for at cost, which means that instead of valuing cryptocurrencies at their fair value on like the reference dates, it was when they like bought it. So like that can kind of like mess with the numbers a little bit.
Nice and shady there. Yeah.
I mean, it's like not illegal to do that. It's a way of accounting, and they do make that clear in the documents, by the way, but it's just sort of like, all right, unless you're digging into it, it's like this small sentence in this like 400-page document that like mention it. So like
you had a bit of a pump on BCH, like after that, the prospectus came out. Like, do you have a view on whether or not, I mean, it was pretty small. I just looked at it. I mean, the thing's up 13.5% over the last week because, you know, it pumped like 20-something%, but it's been fading steadily since then. And so, I mean, do you view it's kind of weird.
But that happens in like normal, like with normal IPOs too, right? Like you always see some sort of like a jump right as IPOs are announced or like a merger is announced, right? Like that's normal even in traditional markets. So like
for BCH specifically, I took the price action in BCH on the back of the Bitmain prospectus being issued as the market taking the stance that Bitmain has a shitload of cash. They own a pile of BCH, and they're going to be incentivized to use the cash to do something with the BCH to make the price of their BCH go up, right? Yeah. And, you know, I think, you know, we all are friends with plenty of BTC maximalists, and they all just like hate so much on BCH. And like, I get it because nobody's really using it for much anything. But it is sort of this interesting perspective where you have like one of the 800-pound gorillas in this market, which is Bitmain, that is highly incentivized to figure out something to do with this asset. So
yeah, no, I agree. But I would also say like because of their sheer size and like kind of how much attention they get, a lot of people have been sort of, you know, have been responding to my tweets being like, well, you know, these numbers are just cooked and they're fake and whatever. But like think about like, I mean, Bitmain can be creative all they want, but to lie about something so public, like they're subject to so much scrutiny and like very clearly defined securities laws. And there's just some serious like blowback if they straight up lie, right? So you have to kind of think about that too. And I get like, you know, I mean, obviously Twitter's not the best place to have nuanced conversations. And
yeah, I didn't mean it lying so much as like what is Bitcoin, like what is Bitmain going to do to make the price of BCH go up? Like that's just
right. They basically have two options, right? They can either like figure out how to slowly deplete their reserves of it so that it doesn't screw up their balance sheet, or they figure out how to make it go up, right? Like it's binary.
I mean, and it's also important to point out that like among their total assets that they disclose, cryptocurrencies take up like almost 30%,
right?
Which is really high.
Yeah, it's not an insignificant chunk of change. I think that the BCH action too is interesting. Travis, I think that you're right that there's like there's going to be speculators who are, that's enough of a reason to kind of hedge into that and just watch a little bit, right? I think that that's natural, especially coming off of, for anyone who realized profits on XRP the week before, it's kind of like, okay, cool. What's the next thing,
Yeah.
So one of the things that I thought was interesting, Katherine, in the tweet storm about Bitmain as well, was sort of the position they took on regulation in the US, which is basically like the emoji guy shrug. It's like we don't really know what to do with it because we're dealing with not only federal but state actors. So earlier, Travis and I were talking about the Attorney General's report in New York that came out a couple of weeks ago about exchanges.
Yeah.
So I guess one is I wanted to see if there's any more that you had was that the sentiment that you felt reading that from a regulation standpoint?
Yeah, well, as you know, I'm a bit of a policy nerd myself, legal policy nerd. And so, yeah, when the report came out, I sat down immediately and read it. But that I actually did a pretty in-depth write-up, and that's just kind of to show, okay, other than federal, there's state, and particularly New York State. And within New York State, the New York Attorney General's office, how much power they do have over sort of regulating this space. And I don't want to go in, we don't have to go into BitLicense. Everyone hates the BitLicense, and we all know it sucks. But I want to actually point out on the federal level, just last week with the one broker shutdown.
Mm-hmm.
So basically what happened was both the CFTC and the SEC each brought action into this case, which is actually not super common. So usually it's the SEC in parallel with the DOJ, because the SEC can't criminally charge anybody, whereas the DOJ can. And if it's the SEC, then it's their territory. You don't ever, or you do see it, but not often, where it's both the SEC and the CFTC, because they actually regulate very different things. And so why are they able to bring charges in this case? Is because the so-called contracts for difference at question had both commodity and securities as the underlying assets. And what's really interesting was both of these agencies characterized these contracts as different things, which hilarious. You can't, definitions are just, I don't know, there's such a mess in this space. But the SEC basically called these instruments security-based swaps, and the CFTC went on this whole thing. They were oh, these are kind of futures, but they're kind of not. Technically they're leveraged retail commodity transactions. And I mean, the whole point is just the jurisdiction was asserted. So the whole point of this is basically that if a US regulator wants to get you, they can find a way to define you in a way that kind of is under their umbrella. And two, that I think we're sort of seeing a weird intersection of enforcement, right? Where these probably should have been separately operated, but overlaps here. So we're potentially seeing interagency cooperation, or maybe sort of a battle with oh, I own this and you own that. And then the second thing is also, one broker was not even based in the US, right? It was based in the Marshall Islands. And so other than, okay, yeah, not wait, actually my favorite part in this entire thing was when they mentioned some undercover agent from the FBI logging
oh
up.
My god. Oh my god.
I thought was so funny. I don't remember which complaint it was from, right? It was
the SEC.
Yeah.
It was very, very written out. Someone had fun that morning in the office, making you imagine a fedora wearing guy lurking in the office.
Yeah, they were oh, there was an undercover agent by the FBI that logged on at this time. We're okay, is this Mission Impossible? I don't know, give me Tom Cruise or something. But actually the reason, oh yeah, so there's the FBI too. So it's I think that was actually a way of being oh, because the agent was based in the US and he was able to log on, that means you were able to serve US customers. So that was actually a way for them to say, oh, that's why we can bring it in the DC court, because this guy was based in DC.
Yeah. So the thing here's a question for both of you guys actually. I think the thing that was interesting about this question is that it was interpreted very differently by two almost totally different ways. One interpretation, which I think was like pretty like clear, and probably the more popular interpretation was, hey, this suggests that the long arm of the law is long, and that maybe this is sort of like a shot across the bow, a warning shot for other types of things that could regulate, like you're not safe if you're outside the US, yada, 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 right? So basically like this is a warning shot interpretation. The other interpretation was, no, actually it's the exact opposite of that, where the SEC is taking this approach where they're really going after enforcement of the worst offenders. And these sort of security swaps are super, super high focus. They're specifically addressed in Dodd-Frank, right? Like, and it was that piece in particular was the reason. So it was actually not a, hey, this is a warning shot for everything else. It was more a, if you do the most egregious shit, we're coming after you. Like, obviously, right? So it is, I'm interested in, I thought it was that both have a lot of merit, and kind of where I was left is that, like, who knows, and, you know, who knows what the mind of the regulators is, but I thought it was interesting that the same action had such different interpretations.
Yeah, well, I mean, this can't be a warning shot. Regulators have only been warning about this for like months, if not years now, you know? So like, if anyone's all like, oh my God, this is such a surprise that they're asserting jurisdiction, I mean, that's surprising to me. Like, if you're still shocked that regulators are taking action over like really scammy and shitty projects, like, that's surprising to me.
Yeah.
I'm not exactly sure the first time that the narrative popped up that U.S. regulators are focused on price manipulation, but we know that in May we had subpoenas sent to like every major exchange, specifically in the context of price manipulation. And so, you know, one of the things, and then like year to date, as BitMEX has become the tail that wags the dog, the you know, synthetic perpetual swap that's supposed to match the physical price, spot price, but actually now drives the physical spot price because of how much volume has moved on to MEX. And before one broker came out, we had you know, internally talked about this concept of like, you know, what are the chances that U.S. regulators say BitMEX may be the home of price manipulation? We're not sure, but there's a chance that there could be price manipulation going on there. That price manipulation affects the retail investor because it affects the spot price of physical BTC, which touches the U.S. retail investor. And so we're gonna go, you know, politely knock on the door, and you know, whether that's in the Seychelles or whether that's in the, you know, top floor of their Hong Kong office above Goldman Sachs. And they're going to say, you know, we're going to take a little look around about what's going on here because we want to protect the U.S. retail investor. And you're like, what happens on the back of that investigation probably doesn't matter that much relative to like if it happens, right? So,
yeah, I would say though, like, a lot of countries do look to U.S. regulators as like the world police. And unfortunately, I think for a lot of businesses that are based abroad, one really common question has sort of become, okay, how important is the U.S. market? How important are the U.S. customers? And I don't think that's a good thing, you know, when like companies are actively trying to find ways to not go into America. And I don't think that's like that's not great for obviously people like customers and users who are potentially based here. And it's also not great for the companies. So I think like, you know, regulators have a long ways to go. And like, we also have a long way to go in educating them.
Cool. Okay, perfect segue. So another sort of manipulation story, or maybe it might be nothing there, that I want to talk about. But first, Myles, welcome.
Thank you.
To our pseudo bar conversation about.
No, this is a full-blown episode of Around the Horn at this point. Like, we got to get some college football score. Like, you know,
oh, dude, I don't want to talk about college football right now.
Yeah.
My Northwestern Wildcats were up 17 on Michigan in the fourth quarter and then lost. So that's nice. It's literally the only sports team I care about, which is weird. Cool, Myles. So you were up till recently at Multicoin Capital, doing a variety of research and investment stuff there. Obviously, I think a lot of people are familiar with Multicoin. You have now moved into a different role, Aurora EOS. Tell us what you're doing.
Yeah, so I left Multicoin to start Aurora EOS, which is an EOS block producer. So yeah, we're a block producer on the EOS mainnet block producer candidate currently, hoping to get elected. But yeah, I mean, for those unfamiliar with EOS, it uses delegated proof of stake, which is an on-chain voting system where token holders get to elect the validator set. They can cast votes on-chain, and then the top validators by total votes received become the core set of block producers. So in EOS, it's 21 parties actually producing blocks at any given time, plus a set of standby block producers that are there to step in should any of the top 21 be voted out.
So one of the things that I thought was interesting is that when you announced Aurora, so obviously, like, we don't have to get into like what people's perspective on EOS is in general, but I feel like I saw a lot of people who are, yeah, right. I feel like I saw a lot of people who were like, well, it's not probably going to change my mind about EOS, but I'm still interested to see what Myles is doing. It's like, you've clearly built up like a reputation as being a super smart, thoughtful guy in this space. So it's cool to see you branching off and doing this thing. So I guess that the part of there's two interesting things in kind of like EOS land, sort of. The one that I want to start with, because I haven't had a chance to dig into it to find out what's there. I think it's interesting from a conceptual level, if nothing else. And then I want to kind of like close with all this riffing on a different piece. But so the first thing is this story that kind of popped out of this Twitter account that there was, I guess, what you would call collusion, or certainly coordination between Chinese block producers with Huobi at the lead to just kind of like, I mean, like what a lot of people worried would happen in a system of block producers or delegated proof of stake, which is like, you scratch my back, I scratch yours. So could you give us kind of like just a rundown of what the allegations were, or whatever, and kind of, you know, what you think about them and what you think about the general case around it?
Yeah. So like what we know now is simply that there was some allegations, and we don't really have definitive proof of what happened, but the allegations were that a set of block producers, mostly located in China, were kind of vote trading, where they basically voted for one another in order to kind of mutually cement their positions in the rankings. And that was allegedly sort of coordinated by Huobi, which is a big exchange and a block producer. And then this kind of gets into another issue, which is exchanges voting on behalf of their users. So an exchange like Huobi, which has a ton of users storing their EOS on the exchange, you know, some exchanges have said like, hey, we're gonna allow our users to vote through you know, a portal inside of the exchange, and some exchanges haven't done that. And so for the exchanges that haven't done that, they can kind of, you know, theoretically they can just arbitrarily vote for whoever they want using a big pool of user funds. And so there's a few issues at play. One is sort of like block producer, if you want to call it like collusion, or like you know, vote trading. The other is like exchanges voting on behalf of users, and like how you handle that. And so I think that like the reality is that, you know, delegated proof of stake is a political system. I mean, I really think all blockchains are political systems, but particularly when you've got on-chain voting taking place, it gets even more political. And when you have a system like EOS that's less than 5 months old, it doesn't have all, you know, the infrastructure around the network isn't fully built up yet to support I think voting on a really large scale and self-custody by users. So you've got a lot of users who are letting their tokens sit on exchange, a lot of users who aren't participating in voting. And as a result, you've got this like pretty small set of users who are actually voting. Right now, the network has something like 39% of tokens are staked, of which I think something like 25% are actually casting votes, and only something like 8%, and don't quote me on those exact numbers, but these are, you know, about only something like 8% are voting for more than 21 block producers. So when you have you know, a system where there's not that many people actually participating in voting, it's a lot easier for something like an exchange or any other party that controls a large amount of tokens to come in and actually have a really outsized influence over you know, over the voting pool. And it's sort of like this all fits under the bucket of voter manipulation. And sorry, go ahead.
No, I was going to ask, like, it sounds like, and not to lead you on before you get to your conclusion, but I mean, is this, I can't imagine that you like spend a bunch of time researching EOS in multi-coin and then launched your own thing only to be surprised at something like this. So like, is your feeling that this is just in the band of like the development of political systems within blockchains?
Yeah, I mean, yeah, this isn't like entirely surprising at all. I mean, anyone who's studied DPoS close enough knows that this is like a potential outcome, and I don't think you ever can fully eliminate this. You know, you can do your best to prevent it and discourage it, but like, you know, people are going to act in their best interest, and sometimes that, you know, is going to involve them attempting to, you know, manipulate the system in their best interest. But
I mean, I was just gonna say, like, it's not just DPoS. Like, I mean, people have been colluding their ass off in cryptocurrency since the very, very beginning. I mean, look at like the New York Agreement, for example, right? Or just anything. I mean, humans have been colluding their ass off since the beginning of civilization, and so like this like techno-utopian view that like everybody's just gonna be real kumbaya with distributed ledger technology. It's like not really the way the world works. So you need incentivization structures to be put in place to you know, at least catch that kind of behavior or decide how much of it you're okay dealing with.
Yeah, I agree. I mean, all of these systems are going to have their like vectors of centralization, and you could probably find, you know, allegations of collusion in all of them. I think like one of the things that you have to realize is that like EOS is a really young network. It doesn't have as developed of an infrastructure, and it's also like I believe it's the largest market cap coin to ever you know, be out there with on-chain governance in place. And like on-chain governance is a new thing. Like the communities that hold these tokens are still learning about how best to make these systems work. And I think one of the things is that like, you know, if we can increase the total number of voters, then manipulation by parties like exchanges becomes a lot more difficult. And so one of the ways you do that is through like, there's a new model being proposed in EOS called the resource exchange, where token holders could lend their, you know, because the EOS tokens are a claim on network resources. So if you have excess capacity, you can rent out those tokens in exchange for like proceeds from the rental market. And the proposal that's being put forth says that like you have to cast votes in order to participate in that market. You have to vote for at least 21 block producers. So that kind of adds this financial incentivization layer for people to participate in voting. And that's one way that you know, increase the total number of voters. Another way is just through creating tools that make it super, super easy and super, super secure to vote. So, you know, if you have to be super technical and vote through the command line in order to like do it in a secure way, then obviously you're going to have low voter turnout. If you have an iPhone wallet that uses Apple's secure enclave to sign transactions, and you can do it in a single transaction using Touch ID, you know, on EOS where there's no transaction fees, then voting becomes a lot easier, and you can get higher voter participation. And then I think the final thing is just education around like, what are these new paradigms? You know, there's a lot of investors that I've talked to who own EOS who haven't yet really sort of made that leap, realizing that like if you own a significant stake in a network like EOS that has on-chain governance, you as a token holder can actually influence the direction of the network, and you can actually contribute to the security of that network by participating in voting and vetting block producers, or at the very least, you know, proxying your vote to a proxy account that's going to do that on your behalf. And I'm having a lot of conversations with investors who are slowly starting to realize this. And I think as the concept of on-chain governance matures, that's going to become more of a thing, because there are parties who have, you know, vested interest in EOS, whether it's crypto funds or dApp developers or enterprises who are building on top of this network, who, you know, have a strong incentive to make sure that the network, you know, is successful and is run by an honest validator set.
Yeah, so we're actually going to talk about an interesting application of EOS in just a second. But I think that two things that stand out to me about this that I agree with you on. So first is, I think that just in general, there's we're still getting used to the blurring of capital and labor, right? And the idea that in these sort of like tokenized blockchain-based networks, what it looks like to contribute to network building is often going to be not as clear cut as being an investor or being a participant or whatever, right? That these lines are going to blur. And I know that obviously both of you guys are living this. Travis, you've been involved from the beginning with a block producer as well, I know. So I think that's just really interesting. And there is a lot of just, not even just education, but reimagining of what your role as an investor is. I think that's a conversation that's one of the most interesting to me, is just what the future of a fund looks like and what it means to allocate capital and time and energy in all these different ways. The second piece that I think is super interesting, going back to your point, Travis, is like, it blows me away that we still like, if you have governance, you will have politics, right? These things are like inextricable, right? Politics is the process by which people advocate for their sense of policies. They campaign for the things that they want, right? And we don't use, like, we don't talk about blockchain politics in any real way, but like, that's just going to be, I think, part and parcel of decentralized networks, is like, if they're not governed in a command and control, traditional centralized board of directors kind of way, their direction is going to be shaped somehow. And it's really a question. I think one of the really interesting questions for me is, to what extent in the sort of the protocol wars, especially, people will align themselves with systems of governance that make more or less sense to them, or that match their sort of general beliefs about governance as a threat vector, right? You know, because you're starting to actually have a full spectrum from minimize any threat, surface area, including governance, to really articulated complex systems that integrate on-chain and off-chain processes with, checks and balances systems built in from the ground up. And it's interesting to me, because it feels like in a mature market, people will start to say like, hey, well, that one makes more sense to me than that one. And I feel like I can price in the risk of being involved with that one because I have more of a sense of how it's going to evolve, versus over here, it's just kind of subject to whim. So I feel like that'll be an interesting thing to see if people actually do that, or if governance continues to be kind of like a secondary focus.
Well, also there's like different applications may choose different governance models, right? It's not just investors. It's like, if you're going to build something on top of a blockchain, you might say, hey, this governance model actually makes a lot of sense for what I'm trying to build, but this other one doesn't. I also think you're right. Like, every blockchain is governed in some sense, whether that takes place on chain or off chain. That's like an additional consideration, but all of these things are political. And I think that becomes especially apparent when you have, like, when these protocols run into problems, like the recent bug in Bitcoin, right? That's when you kind of realize, like, there always is this human layer to things that comes into play when things get problematic.
Centralization gets used as a 4-letter word in this community, and that's not the right, I don't think that's the right frame of reference to think about that, because it's like the scalability trilemma, right? Like, there are some things that need to be more decentralized than others. Like, if you're going to go be a global immutable store of value, like, you need to be really decentralized and like decentralized in the concept of censorship resistance, not just decentralized in the sense of like FOMO 3D, where I'm going to try and like economically juice network effect. But I think a lot of what we're trying to do with this asset class is to rebuild government structures where you may have some amount of centralization, but you have a structure in place where if the individual or the group of individuals or the nodes or the alliance or whatever starts acting shitty, that you can remove them and then put somebody else in the position of centralization where they become better actors. And the really fascinating thing about that to me is that I'm hopeful, and again, I try and be a realist, I'm hopeful that these governance mechanisms that we're trying out right now in the crypto asset space will, like, decades down the line, become the blueprint for how to think about governance in the real world, where, like, we look at like the current state of like US politics and Washington in general, and it's just like so utterly broken, right? And we're trying to find a better way, and we're doing it with this technology platform right now, but it's going to be fascinating to see like how that spills out into, like meat space over the next 2 decades.
I feel like it can't quite get there until we have like Sybil resistant identity on the blockchain. And like, that seems like such a hard issue that I feel like it's quite a ways out, but I think in general, I agree with you.
Yeah. Also, just to add on, like, I think this is why conversations around like token design and token engineering is so important. Like, I know in like the tech and especially like high growth industries, the mantra is generally, you know, move fast and break things. And that's fine, but it's not okay if the things that you're breaking are people. So I know there was a lot of discussion around this, like at ETH Berlin. I'm really excited to see like if people like where people go with like, you know, if this involving sort of discussion.
Yeah, I think it's super interesting. I mean, one of the things that's so fascinating to me about this conversation is, I don't know, we're so in it all the time that it actually takes willfully extracting yourself to recognize how many different experiments you're participating in simultaneously. But I feel like there's actually this really powerful levity. So one of the things that I often find is like, we get super like when there's contentious like screaming going on Twitter, like the bad side of it is that it's not fun to be screamed at or told you're an idiot or whatever, right? And I think we could all be a little less invective. The good thing is that like those things are just part of political processes, right? Like I guarantee you Ethereum, like on the other side of the death spiral narrative, is going to be so much stronger, have higher levels of devotion among the people who live through it, right? Like, and this is part of why like the Bitcoin community, who's been around since, you know, 2011, 2012, 2013, has a chip on their shoulders because they've lived through so much critique, you know? And I think that if we recognize that there are political processes that are literally like furnace gauntlets, like forcing people into this kind of fire space to see what comes out the other side, it gets a little easier to appreciate it as all part of the process.
I actually really like the term that you used, which was it big little industry?
Yeah, our big little industry.
Yeah.
Yeah. Okay, so going to like the opposite end of like from big, like these systems could actually influence the way that meat space politics are organized, to just totally irreverent internet shit. Let's close out on talking about Pixel Master and just incentives.
Don't you talk down about these things. These are going to be saviors of this asset class.
It's okay. So Travis, you start.
Oh, well, I seem like I'm strong opinion about this.
No, I'm excited. I love this. I'm gonna screen share it too for people who haven't seen it.
We've been talking about this for months before I even saw FOMO 3D. Basically, like non-productive utility tokens don't accrue value over the long term. That token structure problem has not been solved yet. It's a meaningful driver of the downward year-to-date price action, is the market's understanding of how value accrual works in this asset class is developed. And you know, we've been talking for months internally about what it's going to take to, you know, make these non-productive utility tokens have value accrual properties to them. And before I even saw FOMO 3D or heard about it, like we talked about these little gimmicks or these growth hacks or these little like virality cheat things. And for whatever reason, whenever I talk about it, I always make my finger like this. I go like this, like you're like hooking people in like this. And it's a little you know, when people first see it, they're like, it's a Ponzi scheme, which it may be, or they're like, that's bullshit. It shouldn't work. It's not going to work for ABC reasons. But like, if you can get sort of some small amount of market participants that are willing to take a risk to get the thing off the ground, and then you create a like classical game theory scenario where the Nash equilibrium is for more participants to enter into that ecosystem, then like that is the little virality hook that you could end up like. We're going to see 10 more Pixel Masters and FOMO 3Ds and this, that, and the other. And then I believe at some point, one of those little hooks is going to get built into a utility token that has a great team and a compelling piece of technology and a great go-to-market strategy. And it's like, that's going to be the thing that's going to like take the thing to $100 billion market cap or whatever, like, you know, whatever, like to get massive adoption to bring this technology, you know, to tons of people that aren't involved currently.
But how do you think about it, like with regards to a utility token? Because like, for example, like Pixel Master is like one interesting thing, or even there's another dApp on EOS that's gotten kind of big called EOS Bet. And like that's got like a revenue share token built into it. And you could even see like Pixel Master, I think they got like a 20% of the profits go to the developers, and they could like tokenize that. But that's more like securities token territory, just like a revenue share token. But like, how do you see this working with a quote unquote utility token model? And I know that phrase is way overused and probably pretty like wide in terms of what its definition could be.
Travis, before you dive in, just for anyone who's watching who hasn't like this looks just like Satoshi's Place or the thing that was on Reddit a little while ago, right? But the mechanism here is that you can write over someone else's pixel for like 1.35 of whatever they bought it for, right? And you get of the profit that like 35% premium that's distributed 75% to the person who owned the pixel before, or 25% to the person who owned the pixel before, and 75% to this pool from which there's also a finality pool and all these other incentives, right? So it's kind of like the idea is that you're not just buying and drawing, you're actually economically incentivized to pick territory where you think someone else is going to go over, right? So there's this whole layer of incentives built into it.
Yeah. So specifically, Myles, I don't know. Like I don't have a like I don't have a white paper drawn out that's like the ultimate token design for a utility structure that like loops in one of these things. But I was joking around in a chat the other day, but I was only like half joking. But it's like what you're seeing with like Fomo 3D and Pixel Masters and things like that is you're seeing these like classical game theory type of scenarios, like stuff out of a textbook. And then they're being reimagined in this kind of crypto native type of way. And I think just directionally, that is like a compelling direction that the space needs to continue to go down. And it's like, it's almost like you should spend a week reading about like classical game theory and mechanism design, and then smoke a big blunt, and then play video games for 3 hours, and then like sit down and try and design a token. Like,
all you developers out there, get at it.
It's funny that you say that. That's actually what we're doing next week.
That actually would make for fantastic content.
Yeah, it really would.
Could make for a great token structure too.
Yeah, no, I think the Pixel 3D thing is like hilarious and funny and fascinating. I'm like excited to watch where it goes. And like I agree. I mean, like we saw Proof of Weak Hands 3D, then we like saw this. One, it's also a great excuse for people to go actually try out EOS, because like I've heard a lot of people criticize EOS and then tell me they've like never tried using a dApp on it, but like go download Scatter, go download Token Pocket, like go play around with this, play around with Everpedia or EOS Bet or something like that, and you'll get a sense of like what the user experience is like. And there's certain things like you know this Pixel Master that kind of benefit from the high throughput and no transaction fees. Like they don't have to worry about you know, breaking the underlying blockchain if they get too popular or having high fees and a bunch of transactions in the mempool. But yeah, I mean, I think we'll see a bunch of other like experiments along these lines. The question is like, are we going to get one that is interesting enough that it kind of bridges the gap from like crypto native people into like getting everyday users on board? Because right now, I think a lot of the people who are using Pixel Master are like, you know, people who are familiar with EOS, people who are already in crypto. But like, does someone figure out something that's compelling enough, interesting enough, fun enough that that you know it kind of really gets viral adoption beyond this? What did you call it? Our big small industry?
Yeah.
I think I'm thinking of it more in terms of taking like a broad generalization of that concept, this like game theory based like virality hook thing, and like generalizing that and inserting it in as one part of a token structure for a broader type of deal. Yeah.
Yeah, and I mean, at the end of the day, these are all like experiments in user experiences that people find compelling, right? Like if you were just like a UX workshop, right, at Stanford right now, who was like, what the shit do we learn from Pixel Master? There's a couple of things that would be reasonable things to think about. Like one, people really like this collaborative graffiti stuff. They like being able to both like put their stamp on things and like write over other people's stuff. Like we've seen enough examples of this now that seems like a thing. That feels like probably a more narrow application than a lot of other things, but like it's there, right? Another thing that's really interesting, especially once we see it all play out, it'll be really interesting to see, did the financial incentive actually change sort of like the velocity of how people adopted this, or how much they did it, or how much they used it compared to, you know, Satoshi's place, which is a really interesting proxy, right? Or comparison point. So that's a really interesting piece. So I think to Travis's point, you know, like a lot of these things are just about learning so that someone can build something similar into some totally different type of experience, you know?
Yeah, and I think there's a lot of like game applications that are kind of interesting where when they're built on a blockchain, you can one, just get this like permissionless global participation in a way that you couldn't before. And then two, you've got value transfer that's already built into those protocols, and you can like programmatically pool funds. And then there's a lot of different things you can do with that. And people like the ability to like, you know, put in, it's classic gambling. You put a little bit into a pot with like the, you know, potential of having a big payout. And the fact that you can do that, you know, programmatically, and then add all these like fun layers on top of it, like Pixel Master has done, I think is pretty interesting.
Awesome. All right, guys. Well, it is 8:10 or 5:10, wherever you are. I appreciate all the time. Thank you for joining me for the first Long Reads Live, or maybe we'll call it something different. I just wanted to flag it for the thing that people know. But anyways, this is super fun. Where can people find you if they want to follow along during the weeks? Katherine?
Sure. So you can find me on Twitter where everyone else lives. My Twitter handle is Katherine YKWU. That's KATHERINE YKWU. And also follow Messari, MESSARI crypto. And I write a lot in the newsletter. So if you want to like hear more of my ramblings, I write in there at least weekly.
Yeah, the newsletter has burst onto the scene. I like that you guys are doing these sort of deep dive analyses. I think it adds a lot of value.
Yeah.
Myles, where do you live?
Like the rest of us, I'm on Twitter at Myles_Snider. That's Myles with a Y, Snider with an I. There's also, you can follow Aurora at Aurora EOS BP. And then if you go to our website, auroraeos.com, you can sign up for our newsletter. We're doing a weekly roundup of everything that's happening in EOS. So if you're skeptical about EOS, if you're bullish on EOS, if you're at all interested, sign up for the newsletter and you can kind of follow along with the most important things that are happening. We're sending it out on Tuesdays now. So sign up tonight and you'll get an issue tomorrow.
Awesome.
Myles with a Y, Snider with an I is like, that's lights out, man. I'm not going to lie.
I know. I've spent 25 years explaining that to people and clarifying stuff.
Also, for anybody that's paying attention to this that hasn't listened to Myles' podcast that was Venture Stories. Was that what it was?
Yeah. Village Global Venture Stories.
Yeah. That one was like super solid in terms of just like, why should you be paying attention to this thing? I just really enjoyed it. And you can find me on MySpace. Look, I'm a little, and I'm going to tell you, it will be quite a long putt to break into my top 8, but like, you know, I'm taking applications and we'll just go from there.
Awesome. All right. Thanks, you guys. We will talk to you soon.
Cool. Appreciate it.
All right, everybody. Thanks for having it.